If Indian domestic players try to increase the price too much, there is possibility to import. Imports is not stopped. It's just that the import cost has gone up. So it nurtures the domestic steel industry. I'm saying this in spite of I being a trader.
Hello, ladies and gentlemen. We're sitting on the sidelines of BigMint India Ferrous Week 2025. I'm Madhumita Mookerji, Consultant Director in charge of Industry Relations at BigMint. I have with me Mr. Subhendu Bose, Managing Director of Duferco Asia, a trading giant based out of Switzerland. Welcome, Mr. Bose, to BigMint India Ferrous Week 2025. At the very outset, I would like you to say a few words about yourself and about your company.
I have, I'm from Bengal, and that's why the BigMint conference is happening in Calcutta. But I have spent most of my life in the steel industry. I started with Tata Steel from Calcutta and in India. After that, I joined Mittal in Dubai and in Europe. And after which I joined in Switzerland, Duferco, which is, as you mentioned, is a trading giant based out of Switzerland. From 2009 onwards, I've been heading the Asian operations of DITH, Duferco International Trade Holding, as we call ourselves, based out of Singapore. Duferco is involved in trading of steel and steel-related products. So we do anything which is connected to the steel industry, which is, of course, we do semis and hot rolled coils, finished steel products. We also do, Duferco is one trading company which is also involved in high-end steel products, which is automotive steel, which not many trading companies do. Right. So we do the full supply chain from raw material to the high-end end users and end use. More than that, we are across 106 countries as we last counted. And our turnover has been more than 10 billion some years. Last year was a bit less because of lower steel prices. I think it was about 7 point some billion dollars. We have one of the best resource, other than the knowledge of the steel industry, is our people. We have a very committed team all over the world, in all these countries. And we have big support from the banks, because you need financial support before you can do trading. So we have more than $6 billion of bank financing facilities, which helps us in the industry.
Right. Thank you so much. We are seeing varying steel demand trends emerging across geographies, US, Europe, China. So from your trading standpoint, which geographies are currently driving demand, and do you think this is going to sustain over the next 12 to 18 months?
See, if you analyze the steel demand over the last 20, 25 years, the 2000s was driven by China because of the tremendous growth there in terms of leveraging, in terms of commitment to the steel industrial use in construction and other end use of steel. That had grown, that had really forced China at more than 16% growth. So the steel industry in the 2000 grew by almost 6% because of the Chinese demand. In the 2010s, that demand went down. The growth in China went down to about less than 4%, 3 to 4%, let's say. However, because of this overall growth in China, China crossed in the 2010s more than 50% of steel consumption of the world. So one country had more than 50% of consumption. And if you compare the per capita, I don't have the numbers offhand, but I think India was at 60 kg per capita. China is at 600. India has now improved. That's the good story of India today, where the growth is coming today from India, from Middle East and other countries and developing world. China is going down. So China, the 600 per capita is going down, but India 600 has become 60, has come to 100, which is a big jump, but it is still much less than China. The developed world is about 200 to 300 kg per capita. So India has surely scope to go to that level. And the developing countries in Asia has scope to go up. Middle East has scope to go up. But the problem that is also happening is the global protectionism.
Yeah, in fact, one of my questions to you is, in fact, I was coming to that, is we are seeing a growing trend of global protectionism. We are seeing tariff curbs coming in from the US. We are seeing carbon emission norms related to absolutely. So that is a kind of a non-tariff barrier. Then we are seeing a lot. We are seeing scrap export ban across many geographies. So how is this playing out on the global arena in terms of global? I mean, do you see an emerging change in global trade flows, especially towards Asia?
Yes, see, if you see the history of steel, probably because it's a basic raw material, all countries take protection against, and it is not a new thing, this protection.
Right.
You are having protection on other things recently, from especially driven by US. But steel has been a protected item since I started my career.
Right.
And I still remember in 2001, US started Section 232.
Right.
George Bush was there.
Absolutely.
And so we have had, and still, even though WTO is there, but still has been countries have protected their domestic industry from imports as much as they could. Today, the protectionism has gone to reached a crescendo, if I may say so. Every country is on their, whoever is producing steel is protecting the domestic industry. You see, Vietnam used to import so much of steel from China. Today, because of their local production, they have put anti-dumping on China also.
Absolutely.
So Asia is protected. The only region which is not protected at the moment is Africa, because they don't have, except South Africa, because they don't have their own steel production there.
Right.
Middle East, where they need material and they don't have too much of steel products.
Right.
So, and Latin America to some extent. But otherwise, tariff and non-tariff barriers are really, is affecting the overall steel trade flow. And as a trader, that's our biggest concern. That's because we need free
So,
market.
do you see any trends emerging in terms of changing trade
It is
flows?
going to get worse, because whoever is putting steel production is putting more and more at.
So, you all are feeling the impact.
We are really feeling it. That's why
Okay.
our tonnages, our volumes are going down.
Your tonnage are going
In
down.
spite of being in all the country, there's still pockets of possibilities, but the possibilities are getting more and more limited.
So, trading companies are getting impacted.
Trading companies are getting.
Let me come to China. China still remains the largest steel exporter. But do you think this trend of being a net steel exporter will gradually come down? Do you think this trend is here to stay?
The recent years, what we have seen,
Despite the fact that in fact, China is trying. I mean, it's wholeheartedly trying to lift its domestic demand. It's bringing in a lot of measures at booster shots. So how do you think this is going to play out?
see, there's a structural overproduction in China compared to the domestic consumption. And so they have more production than they can sell in domestic market. If you see the overall trend of exports of China, last 1 year, they have sharply increased because the domestic consumption is going down by, in the 2020, after the COVID shutdown, reopening after the COVID shutdown, in the last 3 years, Chinese steel consumption has gone down by more than 3%. Whereas the production has not gone down. They're being forced to cut production because their consumption is going down, and they're being forced to export. So the exports has actually gone up. So whatever growth is happening outside China is being taken over by Chinese exports. And the production outside China growth is much less than the Chinese export growth. Chinese export growth has gone up by, I think, more than 30 million tons in the last 3 years.
We ended with 110 million tons, I think, and I think we're going to end the current calendar with maybe 120.
Correct. But it used to be 60, 70 also 3-4 years ago.
Yeah.
So that has been a big jump. So whatever growth is happening outside China is being taken over by Chinese production. Today, growth is happening.
But do you think there's an anomaly? Sorry, I interrupted you. Do you think there's an anomaly here? Because globally, steel demand is very subdued, and yet China is being able to, sustain its export trend.
See, overall global steel demand is subdued, but Asia is still growing.
Right.
especially India. India is a country where we have seen in all these years, we have not seen a negative growth.
Right.
Whereas China has had negative growth.
Right.
Europe, US has had negative growths and positive growth. So there's been varied mix.
Right.
India has been very slow but steady
Right.
because we are very much dependent on domestic consumption. Whereas China, Japan, Korea, Taiwan, they have depended a lot on export consumption. So whenever there's barriers to their exports, their consumption goes down. Now,
Right.
today, as we see it, there is growth in the world. There's growth in India, there's growth in Middle East, there's growth in Asia. US will see very low growth. Europe will see growth in this during the next 4-5 years, but again at a low level. China will see a negative growth. But what we project in the next 5 to 10 years is that the developing world, and supported by the developed world not falling, the demand not falling, will overcome the drop that we see in the Chinese consumption. So we see overall net growth in the world, but China negative, rest of the world positive, rest of the world little bit more positive than China.
And how about other Southeast Asian countries like Vietnam or even Indonesia? How are they, do you see them emerging as big suppliers?
They are emerging as big suppliers, but more to domestic consumption. They are exporting a small volume, but what they are doing is they're replacing Chinese and Indian and Japanese supply and Taiwanese supply by their own local production.
Right.
And they're putting barriers to imports.
Right.
So we have seen Vietnam grow to more than 10 million tons of production today. Wafat and Formosa are big producers to be in Indonesia, and they have plans to grow more. In Indonesia, we are seeing the Chinese, and Malaysia also, we're seeing the Chinese investments, which are really developing into growth areas.
Yes.
Now, let's say in other Asia, which also includes Bangladesh, Pakistan, Sri Lanka, the growth has been subdued in these countries because of political reasons, but I think they are coming back.
Okay.
In terms of steel consumption, especially Sri Lanka and Pakistan has seen the worst. So they will come back. So overall Asia, we are projecting a growth.
At the same time, do you feel that a lot of geographies are saddled with overcapacity?
Of course, it is led by China.
Naturally.
Europe has overcapacity, but Europe is being forced to cut production. If you see Eastern Europe, the cutback in production of the ex-ArcelorMittal mills has been quite a bit. Today Europe is trying to protect their domestic industry with, I consider CBAM to, of course, for the environment, but it is also, truthfully, it is also a non-tariff barrier for all imports. US, we don't see a drop, we see a stable demand there. But US is very protected today. It's very difficult to export there. So the developing world, we see stable growth, like at similar levels, but the developing world, we see a growth, which means that Chinese negative will be overcome by the developing world growth. We are seeing, I would like to project a growth of about 1% for the overall world consumption in the next years.
In the next how many years?
In the next 5 to 10 years.
5 to 10 years.
1%
That's
growth.
very moderate, very conservative.
But you must understand that there's a negative 3% from
Absolutely.
So true. And China consumes 50% of the world's steel. So that for that to be compensated and grow, the rest of the world needs to grow at more than 6%, the developing world, which they will, led by India, which will happen, and by Middle East, with the oil prices stable at today's level. We expect Middle East and India to drive this global demand, but Middle East and other Asia to support this growth in demand.
Right. That brings me to the Indian safeguard duty imposition. The government is mulling a 12% safeguard duty.
It has already come, yes.
Yes, absolutely. So, what could be the implications for our domestic steel industry? To what extent could we benefit?
If you see the global steel production and demand, there are 4 areas I would like to highlight. 3 areas are structurally export-oriented. First is CIS, the second is Japan, Korea, Taiwan, and third is China. These 3 regions are structurally export-oriented. They have more production than consumption. So we see today CIS is, of course, because of barriers to their exports today, because of Crimea and because of Ukraine. They are not able to export artists to very specific countries. Japan, Korea, Taiwan, they want to export. They have the best range in terms of steel quality. They're very well known. But you will now seeing US and Europe putting anti-dumping on Japan.
Right.
So they are trying to protect from Japan, Korea, Taiwan. And of course, China is the biggest player in terms of exports. Their exports have been the highest in the last 3 years in their export growth. And that's why people are putting barriers to their trade. On the other hand, India is very well balanced. India's production and consumption has grown at a very similar level. So you see some momentary areas where India needs to import or India needs to export. But those are short term. The production goes up, but the demand catches up with the production. And so that's why you need to, but we are starting from a lower base. Compared to China, we are 1/6 of China in terms of per capita, also in terms of our production. So that is growing, and India needs protection from Japan, Korea, Taiwan, or China, or even Russia. We should buy when we need to, and that's where I think this duty or whatever safeguard has come will be really helping the domestic industry grow as per the demand growth. We are not trying to be exporters of steel. We are trying to grow as per our demand growth so that we are balanced. And that helps us in terms of nurturing our domestic industry.
But we have already seen rumblings of protest from end user segments.
True. Again, this is politically sensitive, but it is across the world that the domestic steel industries all over the world are being protected. And India is not the first to try to protect their industry. Europe is doing it. The USA is doing it. And if you see the prices, domestic prices in US, in Europe, it is higher than India. So to some extent, the domestic steel industry, it's a balance. You need to nurture the growth, but you also need to nurture the end use. I think India has done a good job in doing that. Whether it continues, I really don't know. But on the other hand, if Indian domestic players try to increase the price too much, there is possibility to import. Imports is not stopped. It's just that the import cost has gone up. So it nurtures the domestic steel industry.
Now it makes me my last question.
And I'm saying this in spite of I being a trader, because it really hurts us.
I know.
With this.
I know.
But if you look from an Indian perspective, probably this is what is necessary.
Right. This brings me to my last question to you. Keeping the growing protectionism in mind, how is this playing out on the global logistics front? And how is it, what implications does it have for global trading giants like Duferco?
Global logistics is, of course, because of the changes in the trade flows, we have to develop new logistic models. The other thing that affects is the uncertainty in terms of political influence. Also, the strife. Today, we have so many problems with the Suez Canal, with Panama Canal. So we have to be logistically, we have to be always on our toes, because logistics cost is a very important commodity or component of our sales transaction price. And that is, you are absolutely right. We have seen logistics become extremely important since COVID days. During the COVID days, we could manage the logistics in spite of working from home. Almost all of the world was shut down, but the logistics continued. And that was across the world. But now the changes that happen, we have to really dance to these changes. While we don't like it, but if you can manage the logistics better, that is your advantage.
So how does your freight rates playing out in the near term?
Freight rates
short to medium term
had gone up during COVID times because there's huge exports into China, exports out of China.
Out of China,
they have moderated, but it is not as low as it used to be in the late 2000s. It had really gone. The shipping industry was really suffering. So today, I think it's a good rate. We prefer a stable rate, but we believe that if the rates are volatile, it actually helps us because we can manage the rates better than other traders. So it helps us to do more business. On the other hand, a stable freight rate, we expect freight rates to be stable. It depends a lot on oil price also.
Absolutely.
But oil price has been relatively stable at today's level, at 70 plus minus. And we expect that to continue. So we don't expect freight rates to go down too much. On the other hand, we don't, unless oil prices really goes up, we don't see freight rates going up, because at the end of the day, the global steel demand and the overall economic situation in the world is not very good. We are seeing a growth, but it's not going to be a big growth.
You see freights being stable over the short to medium term despite the geopolitical scenario playing out across the world.
Freights are not going down, because for them to go down, what the shipping industry has become more stable and consolidated. They are trying their best to maintain the rates. So it doesn't go down too much as it used to in the 2010s. I would say we had seen a very bad shipping situation in the 2010s. I don't see that happening again. But again, in today's world, it's very difficult to project. Things can go wrong.
Absolutely. Thank you so much, Mr. Bose, for giving us your time. And it was a pleasure having Mr. Bose with us for this interview, and for giving us your time. And we have to end the podcast here. I'm Madhumita Mookerji, Consultant Director in charge of Industry Relations at BigMint. We hope to be back with another podcast very soon. Thank you, everyone. Thank you, Mr. Bose, again.
Thank you so much for this opportunity.
Thank you.